Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXpressor. So apologies for the difference in timing. The person who set up the Market Snapshot episode mistook the 11 a.m. for 10 a.m. So nothing has changed. Fundamentally, the Market Snapshot series will continue at the same time, 11 a.m. every day. So hopefully we will get to rectify the error going forward. So before we make further progress, I would like to begin with a mic test. So if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. So hello, Charlie Genius. Hello, Lemuel. Thank you guys. Thank you for your responses. I appreciate this. So let's get things going. So yesterday was largely a quiet day with a public holiday in Japan. So we had a very low trading volume at the beginning of the week. But now today, volatility is expected to pick up, and we should be seeing some form of momentum picking up as we enter the London session, and of course, more momentum happening during the New York session. So hello, Humphrey. You can see Magera, Drew, and Robbie. Thank you, guys. So let's start with what's the major things happening in the market today. So the major things are basically two key data points that will be announced later in the day. So the very first data point we've had is the monetary policy meeting minutes, which basically implied that the Reserve Bank of Australia was looking to go for another rate hike on its last meeting. So in this case, there is an overall expectation that there is a possibility that the Reserve Bank of Australia would fix in another 25 basis point hike before the end of the year. And this was pretty much bullish for the Australian dollar against other currencies. And we may expect that to be the order of the day. Then later on at midday, we'll be getting data from the Eurozone. And this will be the final core CPI, which is basically a measure of inflation in the Eurozone. So also final CPI, which is expected to remain steady at 5.3%, while core CPI is also expected to remain the same level at 5.3%. So this could bring in some much needed volatility in the European or the Euro currency traders. Then we will be seeing some good momentum coming from the Canadian economy. And this will be after the announcement of CPI data at 3:30 p.m. So the overall expectation is that the common CPI remains at 4.8% as per the previous reading, whereas trimmed CPI is expected to rise by 0.1 to 3.7%. So we have been seeing this consistent theme as a result of the oil prices rising for the last 3 months. As a result of that, we have had inflation making a U-turn for major economies. So we saw it happening with the US, where inflation was at 3.2%. And then immediately it jumped to 3.7%. So we could be seeing a similar trend happening in Canada. And of course, remember, there's more economies that will be reporting inflation data. For instance, Japan will be reporting on its inflation data on Friday, whereas the UK will be reporting its inflation data on Wednesday, which is tomorrow, at exactly 9 a.m., where we expect inflation to move from 6.8% to 7.0%. So the same case is expected here. So whereas on one side, we are seeing the Canadian dollar being pretty strong across the market, higher oil prices could potentially lead to higher consumer goods, and this may imply a high inflation number. So a high inflation number would basically add pressure to the Bank of Canada to continue hiking interest rates. So in that case, it would be positive for the Canadian dollar. And on the other hand, if there's a weaker inflation rate, it means that that is consistent with the Bank of Canada expectations. In that case, we would be expecting a weaker Canadian dollar. So on the other hand, we know that the biggest mover of the Canadian dollar over the last couple of weeks has been the strong oil market. So as long as oil markets continue running and crafting new highs, then we expect the Canadian dollar to be also strong. So in this case, if there was a higher inflation pushing the Bank of Canada to hike interest rates and there's strong oil markets, then that would be extremely bullish for the Canadian dollar. So looking at the charts, there's quite a number of things that we'll be noticing. I think the number one chart on my mind right now is the CAD JPY currency pair. So this is the one currency that has been extremely bullish for quite a while now. And now, having tested a major resistance level, it's on the verge of breaking a major resistance level. So it's not every day that you get to experience a chart like this. The market finds a very strong resistance, pulls back downwards, and then starts building back towards that resistance level. So in this case, what we are witnessing here is a market that has really struggled to get back to that particular level, but eventually it made that break, and now we are looking at the price looking to break this resistance level. So the break has already happened. So if you go to a smaller time frame on the 1 hour chart, you would see that the resistance was 109.492, which the market tested yesterday several times, was unable to break. But then today, since morning, we have seen an acceleration of price above that area. And this only means one thing. There's more room for upside momentum towards the previous resistance. The previous resistance is not very far off. It's 110.363. But then from a 1 day perspective, you can see there's still some more momentum expected in this chart. So there's this potential that we could be seeing the CAD JPY currency pair hurry all the way up to this point. So the other key asset to consider for today, I know this is quite abnormal. I've not been doing some of these assets for quite a while now, is the price of silver, which is currently at $23.33 $3 per barrel, per ounce, almost said per barrel. So this is what we are looking at here. A market that was unable to break this neckline for quite a period of time. So clearly you can see this is an inverted head and shoulder formation. So if you are to map the first shoulder, you would say that this is the first shoulder here. Then if you are to map the head, then this would be our head. And then the other shoulder would be, let's say, from this point down to this point and then back. So that would basically complete the inverted head and shoulder pattern on the silver chart. And in this case, we have a clean break towards the upper side, which implies that we could be seeing some good momentum coming from silver prices. So this is the biggest swing on the chart. So in this case, we may expect something similar to this. So very strong rally in silver against the US dollar would be coming up, and this would be presenting a very nice buying opportunity as we continue trading this break upwards. So with that in mind, now we could be looking at other potential trading opportunities. So remember to always practice proper risk management, and that these sessions are purely educational. So it's not a recommendation to trade, nor is it an trading advice. So European equity indices are making a comeback after the big sell-off yesterday. So from the 1 hour chart, you can see the big momentum that just started in the last 1 hour. For the French 40 index, we can see for the Euro Stoxx 50 index, and of course, for the London FTSE 100. So all of them are making an impressive comeback. I expect this to continue for the rest of the day. Then for the dollar index, we have had a major flag forming here over the last 2 days. So this was a Friday and Monday before we had this break towards the lower side. So the market retested once and then twice, and then from the price as shown in the last 1 hour, it indicates a break towards the lower side, which might continue to be the theme for the US dollar index for the rest of the day. So from what we are seeing here is a market that opened here, moved up for 8 consecutive hours, and then in the 9th hour, erased all the gains within one candlestick. So this is evidence of strong bearish entry or strong bearish momentum. So in this case, we should be expecting a weaker dollar, whereas these other assets continue making a recovery against the dollar. So for pound USD, I expect some form of bullishness to be starting to present itself in this chart. But for now, the market is still within a consolidation zone. So this is what we are having here. And then we have here. So you can see the market is almost breaking to the upper side, but it hasn't happened yet. So it's still a wait and see kind of a scenario. Once we confirm this break, then it represents the opportunity here. Then we have USDN, which has been attempting to break this resistance for quite a period now. So Friday last week, Monday, which was yesterday, then today, followed by a clean drop, meaning that there's a very strong resistance at this area, which basically implies that prices could be headed further back downwards, especially considering the weaker dollar. So we could be seeing the dollar continuing to lose to the JPY, having found a very strong resistance at 147.816. So the idea is that if you go short, then your stop loss just goes nearby to the nearest high. And then if the market plays out as expected, then we could be seeing a nice drop to say 147.044. So Euro USD bouncing on strongly. Yesterday, we managed to highlight this triangle. So the market managed to break very well, found resistance here, kept retesting, was unable to break. And now in the last 1 hour, you have had a major jump to the same resistance. And if we break here, then it could be moving even higher. So there is a good likelihood we'll be seeing some further upside for the Euro USD, especially towards the breaking point here of the former pattern. So the former pattern was this channel here. So if the Euro USD rallies higher than 1.0718 might be a nice target. So USD CAD as a witness of a very strong Canadian dollar. We have seen the market now breaking this support level here and moving further back downwards, which basically implies that there is more room for further downside momentum. And if oil prices keep on strengthening, then this might be a nice target. So notice how it was acting as a resistance here. And now after acting as resistance, it acted as support here. And now the market is headed towards that same level. So it's a nice target around 1.33862. So as for gold, the bullish momentum continues. So yesterday, the target was just around here, which was the resistance. And then the market moved higher towards midnight. It reached quite a number of gains since morning. So if you look at the number of bearish candlesticks here is around 6. Then in one candlestick, erased all the losses. And now we are about to craft a new high. So in this case, there's a good possibility that we will be seeing some further upside momentum happening in gold, potentially getting us to the 1938 price level. So 1938 price level seems to be significant here as a resistance, here as a support, and as a resistance yet again. So in this case, we expect gold prices to continue running higher to 1938. And if we breach this level, then 1948 becomes the new target. So we have seen this bullish momentum in gold continuing quite well. And of course, from the most recent swing here, and followed by this other swing, we can already tell that the market is now forming higher lows. And now it's about time we test whether the market will be going for another high. So in this case, potentially higher high. So for now, there's also an existing trend line that we should be concerned about. And the trend line is right from this swing all the way up. So if we compare with these prices here, then it makes sense to use this as a nice target, which is around 1938, and then observe price around that price level. So AUD-USD making a very strong rally here. So you notice how you are on a sideways momentum, market broke out upwards, traded in a flag backwards, found support here, rallied all the way to the resistance, pulled back, traded sideways, and now we are retesting the previous high. So there is a good chance we will be seeing some further upside momentum from the AUD-USD, especially after seeing the minutes of the RBA early this morning, which suggests that they will be going for another rate hike later in the year. So US equity indices managed to trade sideways for a while yesterday after the strong momentum on Friday. So we still don't have a direction yet. And I believe that the markets are stalling as they await the Fed or the FOMC decision, which comes up later in the week. So we are seeing the same kind of stalling happening for the US 30, and of course, for the S&P 500, the markets are also stalling. So we don't have a direction yet. The markets are just playing in a sideways momentum. So it's a matter of wait and see until we have a clean or clear-cut direction. So for now, it makes sense to be patient and wait until the announcement of the interest rate decision. So on the Brent oil side, we have yet another consolidation here where we have an ascending triangle. So on one side, the market is unable to break. On then the other side, the market is basically forming this triangle. So what this means is that the market is basically being at a potential where the market could eventually break towards the upper side trading opportunity for another momentum or another leg up. So if I was to adjust these, so it's more accurate. So if the market is trading opportunity, similar to what we had here. So Brent oil traded for like 5 days sideways, then made a break and rallied to $94 per barrel within a very short period of time, right from around 90 to 94. So that is $4 gained within 3 days. So now we have had 2 consecutive days where the market is moving sideways. So today being the 3rd day, eventually we expect some form of breakout. So if the breakout happens in the upper side, we go for a buy trade. If it's the lower side, we go for a short trade. But then I'm in favor of a breakout towards the upper side, which would represent a nice trading opportunity, perhaps riding the wave all the way up to $100. So there is a wide-scale speculation that oil could eventually get to $100. And if that happens, then it would represent a very nice rally where we could take advantage of the momentum. So the most recent highs were all the way back in last year. And this is during the month of November, and that was around $97.7 per barrel. So in this case, if the market was to break above here, then a nice rally to 97 might make more sense. So potentially squeezing in some nice momentum trades here. So let's see if you guys have any questions. Hello, Drew. I can see Mogera and Humphrey, Robbie and Apollo. Hi, Nelson. Hi, Jescode. Why does the final CPI in Euro does not have more volatility than the flash CPI? So it's because it's computed weekly. Every week they keep on adjusting. So there is no big announcement happening. So at the same time, when you're looking at the final CPI in the zone, we are combining the CPIs from the various countries, which individuals can also do for themselves. So we are looking at the CPI for the Eurozone, Italy, France, and so on, combining them and then making a projection for the overall CPI. So this explains why these are not such a big surprise for European CPI data, but there is a big surprise for other CPI data. So there's a question, inverted head and shoulder pattern on NASDAQ 1 hour time frame varied. Let's see if that is the case. NASDAQ 100, wonder where you're seeing the inverted head and shoulder. I don't think there's an inverted head and shoulder here. Yeah, it may seem like there is one. Market going up and then down, up, down, up, but we don't have a clear-cut neckline. Yeah, it seems similar to an inverted head and shoulder pattern. If this was your neckline, then notice the first shoulder doesn't quite get back to the neckline. The head, neckline, and then the other shoulder, neckline. I think we would be foreseeing issues here. It would not be as complete as the one we saw in silver. But then it's also a consideration. So from the 4-hour chart or even from the 15-minute chart, you can already see this is what's happening. The market is basically being unable to form lower lows. But then instead of thinking of this as a reversal pattern, if you think of these as a consolidation that usually happens as a form of indecision before a major news announcement, then this might make more sense. Saying that the market is muted, it's moving sideways, awaiting more fuel, which might come from the next announcement by the FOMC on whether they are going to hike interest rates or hold interest rates level. So that's the preferred way that personally I would go about. Could you possibly shed more light on Canadian CPI, given that we know Canada is crude exporter and the prices of crude is high? How do you analyze in fundamentals? So crude oil prices affect also the consumer the same way, whether you're in Canada or outside. So if prices are going high, yes, there will be more demand for the Canadian dollar. But then for the Canadians themselves, they will find general prices moving higher. And in that case, their central bank have a mandate to make sure that they stabilize prices. In that case, they have to hike interest rates. So if there is high inflation in Canada as a result of the rising oil prices, the Bank of Canada may have to hike interest rates, which would be very much positive for the Canadian dollar, especially combined with the fact that we are seeing a very strong Canadian dollar as a result of high energy prices. So very strong CPI might do the trick to buy the Canadian dollar against other currencies. And I think CAT JPY is a key target you might want to consider going forward. What are your rates currently to US dollar? Have a look at Euro Audi. I think you can check this from the website. Just go before you make a deposit. You'll always check the rate first before confirming the amount you're depositing. So last point I'll be making today is that there's a 99% probability, according to Fed futures, that the market will go for another, that the Fed will go for another rate hike, for a pause rather than a rate hike. So the probability has increased to 99%, meaning that the people who are trading the Fed futures are basically betting 99% confidently that the Fed will hold interest rates steady at between 5.25% and 5.50%. So there's only a 1% chance that the Fed will go for a rate hike on its next meeting, which is later this week on 20th. This is basically tomorrow. So in this case, a lot of investors are betting on a Fed pause. So a Fed pause would clearly be very negative for the dollar. So if it's negative for the dollar, then we should be seeing the dollar index starting to take a step back after making an impressive 9-week rally. So in this case, a potential pullback from the recent highs might surface in the market. I could be wrong. The guys trading the Fed futures rates could also be wrong. But then this is what the probabilities are showing. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. Rates could also be wrong, but then this is what